Welcome to TradeTheMBI.com. This is John's reports for the 21st, and well, there you have it. We pushed right back up to the highs on the improved shakeout with that orange dip here on the S&P, moving back towards the highs. Excellent from an extreme histogram standpoint, no issues there, and the fact that we get the significant dip of shorts now with the cyan below negative 7.5 almost. It's at negative 672, but over negative 6.25 is very bullish setup within that construct, and pretty much market's doing exactly like we talked about. NASDAQ behind. I think you see some of the tech companies having a little bit of issues, but they were also ahead just from a ratio standpoint of where the S&P was. So it's just sort of like that leveling out we talked about a few months ago that would take place. Here we had the euro. Massive rises certainly helped the S&P, and that's in and of itself can bolster it significantly right there. And you can see we had the clean buy setup come in there. Likely to hit that resistance upper band here that I've got in that 115.5-ish range, and probably reject from there. We'll have to see how strong it is. I mean, it's pretty significant. Pretty much shorts faded out of it completely within this configuration, and that's exactly what we're seeing from the S&P. So interesting correlation between the two. And of course, Treasury is still skyrocketing, bizarre. This is almost an expectation of a crash built in, and if it doesn't take place, is people are going to have been so positioned incorrectly that it's going to really be an interesting catalyst to the upside because they'll have missed most of the return. And oil moving that bar, not really that significantly. The little pop in gold was well predicted. We had no issues with that whatsoever. From an intraday standpoint, we had talked about this marker level right here, positive extreme. Sure enough, got a couple of blue dots, filled it back in all the way, actually. Didn't quite get down to some of these other ones that still exist down here. It's all the way over here, but that's okay. It can take a little bit of time for that to happen. Right now, we broke out to the new highs. White candle is usually bearish when it's up at the 100% level. And sure enough, it's filled all the way back in, but huge dip of short activity, just not even present when you get that kind of dip. That's just not a normal one. You had it right back here as well. So a little bit more of anomalies developing, which is not inconsistent with the fact that we're in holiday period, and that's okay. We'll just take what we've got, and so far it's been pretty good and very clean from a reading standpoint. We were expecting this pullback to at least this low point right there, and as I mentioned, as soon as new buy came in, we would expect the highs to be revisited, and sure enough they were, and did exactly the same thing, came to the same 23% on the breakdowns from the little orange spikes. We'll see if we get the same behavior. It seems still rather bullishly positive in general, so unless there's some catalyst that would do something different to it, pretty much people are just going to stay away from stopping it from doing its slow climb. Was exactly what we saw in the mid-90s when things were good. So keep letting them be good. As always, though, trade well.